Hey guys, welcome to my YouTube channel. My name is Don Aslam. I'm a 700k funded trader, and in today's video we're going to be speaking about how to take sniper entries using the break and retest strategy. Let's get straight into it. Now I'm going to be showing guys how I draw my key levels, because your entries are only going to be good as your key levels, right? And that's the honest truth. Whether you call them support and resistance levels, supply and demand levels, whatever you call them, I'm going to be showing how I pretty much exactly how I draw the key levels. Now, I mean, this is why I'm able to catch these 1 to 8s. I'm recently been trading crude oil. Oil is insane, guys. The opportunity that it presents. I used to trade GJ. It's been my bread and butter for a long time, as long as I can remember. 1 to 4s, 1 to 5s, sometimes 1 to 6s. But oil, you know, it can provide 1 to 7s, 1 to 8s, 1 to 9s, and if it keeps going, 1 to 15s. Now, talk is cheap. This only has value if I can show evidence too. Now, let me just show you to my 1-to-1 Discord. Now, this is some of my students catching 1 to 6s on gold. Actually, let me just see. I mean, here, right, on the funded certificate, this is in front of 800 plus members. Everyone could see, you know, student results, my results, posting certificates. But let me just show you something, guys. This is where the proof is, right? This was a trade on the 3rd. I was trading oil, and if you look at the time here, guys, 1:55, right? So if you're watching on this on a TV or phone, mobile phone, computer, whatever, just zoom in. 1:55 p.m. UK time on the 3rd. And if you look here, guys, this trade was on this particular level. I took the entry. Now this is at 1:55. Now if I go on my winning trades, that's right. Of course, I post my losing trades. The students post everyone posts. It's all about transparency at the end of the day, right? 1:55. That trade was taken on 10:02. Right? Look at this on the 3rd. This trade here, that particular one I showed you, it tanked all the way to a 1 to 11.6. But I just got out. You know, I could have said, you know, oh yeah, I took a 1, I gained a 1 to 11. I could have easily said that, but no. The truth of the matter is, I took a 1 to 7. Now we post all our results in the, you know, in the elite mentorship. This is where I also provide 1-to-1 mentorship, group calls. Like, if you are interested, guys, you know, there'll be a link in the video description. Just come and hit me up direct if you are interested, and you just want to fast track your trading. But yeah, now, why was I able to take, you know, an entry like that? It's all about your key levels, guys. Sniper entries are not possible if your key levels are rubbish, and that's the, you know, truth of the matter. Now, a little bit on myself as well. I've always been someone who's, you know, been I like to think of myself as a bit of a perfectionist. I show this in pretty much, if you've been watching my content, I show my back tested data on GJ. This is like on the 4-hour time frame, guys. One blue line to blue line is 1 week. One red line to red line is 1 month. So you can see how much extensive data I've collected, and I don't just stop there. Then I like to, this is on Canva, that I wanted to pinpoint and know exactly, you know, how often does a loss happen? How often does a win happen? You know, how often do I lose a trade? How often do I win a trade? And then I like to collect that data, and then I fitted it onto here. And I didn't just stop there, guys. Then I came onto Microsoft Excel, and then of course, you know, I just planted all the data into here. As you can see here, I collected about 534 days worth of data, and then I just wanted to know how much percentage gained at the end of the pretty much day. Was it above 10% or was it below 10%? That's how I collected the data on some particular days, because if you are aiming for these huge numbers, risk to reward, and you know exactly how to draw the key levels, trust me, the numbers can play heavily in your favor. So now that we've got that out of the way, I just wanted to show that, guys, you know, just so that I'm not just saying this, I'm not just, you know, walking up one day and just, you know, start passing these profit challenges. This is one of my 100k certificates, but you know, I had to put the work in. It didn't happen overnight. Now let's go take a deep dive. Now we're going to be using gold for the example. Gold is a notoriously famous currency pair. If you've been noticing this -10 that I've put here, guys, this is only for the reason because, you know, we're going to start with a -10 drawdown, and we're going to be looking at, okay, so I'm already doing 10% in drawdown, right? Let's take a deep dive into it. Now, how do I draw these key levels? Now, you can use the bigger time frames. Of course, in the 1-to-1, I break it down exactly what time frames I use to draw these key levels. But what you can do is, let's just go on the bigger time frames. For example, you want to focus on these major rejection points. So we've got resistance here, we've got level of resistance here, and we've got support here, and then I've got resistance here, and then I've got level of support here here as well. Now this is like, I like to call it the equal low candlestick pattern. Now if I even turn to the line chart, we've got this sharp edge here, major rejection. We've got a sharp edge over here, major rejection. Now bear in mind, this is a super clean one. this pattern here, this rejection here, but just on the 4 hour time frame. I've got the 5 hours, I've got the 6 hours. It's totally you know, your choice which time frame you want to use. Now once you've marked out those key levels, now it's pretty much straightforward, right? I always get these messages, oh, you never sure how to draw these key levels. I mean, it's pretty much, you know, simple. I understand everyone's key levels will be different. I totally understand that, right? Now, but the more you practice, the better you'll become, and the more consistent you'll become on drawing these better key levels. Now I want to okay, so we got the key levels, right? But let me just go into that bit more in, you know, I don't want to leave this key level topic because entry is super simple, right? You can just wait for price to come in this key level. Number 2, you wait for a breakout. Number 3, you wait for the rejection, you take the entry, you walk away, set and forget, set your alerts, and then that's about it. So I don't want to go double down too much on entries. I will do, but let's just focus still on key levels, how I draw the key levels. Now, so we got one here, this is a rejection, clean rejection over here, support, resistance over here, support over here. I mean, it's pretty much obvious, right? Now someone might say, well, you got a rejection over here, you got a rejection over here as well. Let me just highlight these so it's easy for you. Okay, we got rejection at the bottom here. Why didn't I draw at the bottom here? We got one over here. Oh well, we got one huge big one over here, and we've got another one over here. Okay, let's zoom out. Where, if we look at the whole bigger picture, right? Whenever you're confused, either you go to a bigger time frame or either you just zoom out. Simple. But think about this now, guys. There was one rejection over here. Now, are there pretty much, let's grab a line. Let's grab a line and chuck one down here. Okay, resistance over here, support over here, resistance, support. So we can use this. But then what do you want to do? Now, just to, as an extra confluence, what you can do, guys, is go to a bigger time frame. I like to normally go to a much bigger time frame and just, if the, yeah, okay, it's pretty much holding. If I just clone this. Now, I can't go into the exact method on how to filter out these key levels. It wouldn't be fair to the students in the one-to-one mentorship. I'm just giving you an example over here, guys, right? Now, another key level, I've just drawn it, right? And you can pretty much, now, the confusion where majority of the people get is drawing too many key levels or having too many entry points. You know, it's it makes sense because if you draw too many key levels, you're going to be entering everywhere. Now, the bigger time frame, you can use them to clean the key levels out. That's one of the ways. You can use the line chart to filter out as well where most of the rejections are seeing. You're seeing. You know, that's another way. But again, you know, it's going to be down to the individual how you've even drawn the key level in the first place. But it's all about key levels, right? Now, if I go to a smaller time frame, we'll start with the 30 minutes and then make our way down and see. I mean, look at this here, guys. So we've already 10% in drawdown, but look at this. I'm going to wait for a breakout. As we can see, this huge bullish candle. Now, the 30-minute time frame is a strong time frame, right? Whether you use the 1 hour time frame, if you want to even use the 1 hour time frame, you can use the 30-minute time frame, you can use a 20-minute time frame. I normally like to use time frames, guys, that people haven't heard of, like what's the notorious ones out there. We hear them, you know, 4 hour, 1 hour, 4 hour, 30 minutes, 15 minutes, 1 minute, 5 minute. These are the ones that we mostly hear, right? Do you ever hear of anyone using the 2 minute, 3 minute, 10 minute, 20 minute, 3rd hour, 2nd hour, 6th hour, 5th hour? No. You gotta do, guys, you gotta work in a way, you gotta create a method where others have not used yet, right? If you want to be 99% of traders fail, so the 1% that succeed, they're gonna be doing something different. Like I read a fantastic, brilliant book by Tom Hugard, The Best Loser Wins, and he emphasizes on, you know, you gotta think different to the 99%. I'll give you one example. 99%, we've always been taught buy off support, sell from resistance. I don't do that. I don't wait for price to come near the support. I will not take a buy. It doesn't work like that. You have to, like, look here. I'll give you an example, guys. Price comes down here to this support level. Yes, it works over here if you would have taken a buy or a shot back up. But here, if I were taking a buy, look what would have happened. It would have, first of all, even if you were taking a buy or a sell, you would have lost both trades most likely. But it just shows though, here you go for a sell from resistance, and okay, but majority of the time where I've seen, guys, and I've back tested again, I've collected the data, guys. On the right side, all the links are there from each trading view chart. This does not happen all the time. Majority of the time, if you sell off resistance, you know, and buy off support, your stop loss is going to get hit majority of the time. Take my word for that. I've already collected the backtest. You know, I've shown you the backtested data. I've got the statistics and the numbers. Okay, so here, clean breakout. Now, I mean, look at this candle over here, guys. So we've drawn the levels now, and let's focus on the entries. Right now, I've dropped these levels, you know, super quick, right? Not even refined them now, but still though, can you see how this candlestick pattern here is respecting the key level? It's closing perfectly below, only wicks are going above, so it's showing me rejections. Now it's broken, but you know, from this bullish candle, price comes back down, pushes the you know, it comes back down, then huge bullish candle over here. Now this tells me buyers are in full control, to say the least. Price comes back up. Now, do we take our entry? No, we don't take the entry, guys. We wait for price to come back in our zone, in near enough our key level, whatever you want to call it. It comes back down. Now here again, it breaks through. Now what you want to do is you can go to a much smaller time frame. You want to do this step by step, guys. A certain time frame for drawing the key levels, a certain time frame for the breakout, a certain time frame for rejection and candlestick patterns. Now I've personally refined the break and retest to be uniquely my own. The way what I'm showing here, guys, I don't teach it like this in the one-to-one mentorship program. You know, the win rate and the risk to reward is much better. Now as you can see here, where would you enter? I want you to take a guess, guys. Where would you enter from this? After this huge bullish candle, where, I'm gonna give you about 5 seconds, where would you enter from this? Take a look. I'm going to zoom in more. Ask yourself, where would you pretty much enter from? Huge bullish candle, market is coming back down, so where would you take the entry from? 1, 2, 3, 4, 5. Where do you say? Where do you think? Me personally, when price comes back down here, I wouldn't take the entry. It's still forming bearish candles. I would wait for a bullish candle to form, because yeah, this was a, you know, this may be a fake out bullish candle here for the breakout. Market's coming back down, but look what's happening. We're getting a bearish candle. Again, it's broken back down through that key level that I drew earlier. Again, another sign that the key level is perfectly drawn. Why? Because look at this clean bearish rejection, that wick. Price comes back up. Now here's the first sign. This is a super strong bullish candle. There is no wick rejection at the top. This, if I just turn on, even on my candle strength indicator, if I just show you, let's go bring it back, it won't turn on until I don't come a bit more. Yeah, that's better. 99.42%. look at the strength of that candle, guys. This is how it shows that bulls, how much control the bulls are in. Not only that, it's not created the best, you know, morning star pattern, but there is a, you know, pattern there. Huge bullish candle after that again, but look at the, bear in mind though, look at this wick rejection over here, not the cleanest. Price comes back down, right? Bearish candle again. Now we've got a bullish candle here, but now this is one of my favorite entry candlestick patterns. I call it the equal low, equal high pattern, depending on, you know, if it's a bearish candle first or a bullish candle first. It's a bearish candle first. And why do I call this equal low? Because look at the lows of it. It's like two people are sat on a bench together. Right? Does that make sense? Perfectly. Only the wicks are coming through, but the candle bodies, they're respecting this level. Bullish candle break above the key level. Now again, 100% candlestick pattern. You could take your entry after this pattern here, sorry, candlestick, or you could take your entry after this candlestick here. Now price normally retraces about 30 to, from my personal experience, 30 to 50% of the previous candle. It retraces back. In this case, this retraced almost a little bit over 50%, but I would have just taken the entry from here, and again it just flies. Now where did this whole thing start from? Did it start from the candlestick patterns, or did I realize bullish momentum, bearish momentum, or even the trend? My strategy, the way I've refined the break and retest, guys, I don't care about the trend. I've even made a video. I posted videos passing phase 1s, phase 2s in one day, passing accounts in 2 trades, 50k account. I posted videos where, you know, I've traded against the trend because my strategy presented an opportunity and I caught a 1 to 5. The trend does not affect this strategy, right? You just focus on this is why I follow the guys at SMB Capital, none of these social media so-called forex gurus. You know, I follow the guys at SMB Capital. They trade for every opportunity. If they see 10 opportunities, they take 10 trades. Normally here, you know, some people saying, oh, if you lose 1 trade for the day, come back the next day. Well, what if you lose a trade in London session and then in New York session you got another opportunity to take a trade, but you don't take it because you think you're 1% down, but that trade would have given me a 1 to 5 or a 1 to 6. It's insane. I just take every opportunity, but then I manage risk accordingly though. That's what's gonna, you know, you take 10 trades, But if I was to, I'll give you an example. If I was to lose 3-4 trades in a row, right, but you know, then that doesn't mean I continue risking that same 1%. I'll drop it to 0.5%. If I was to lose 6-7 trades, which I don't, I have a much my win rate with the GJ is around 65 to 72% with the 1 to 4 risk to reward. With oil it's around 55-56%, but 1 to 8s, you know, it's insane. I only have to have I mean, let's get this, one of my favorite tools over here. But if I just show you even here, guys, I'm always using this coin flip here. It's a very fancy tool here that just gives me okay, so let's flip the coin, right? So out of 10 trades, 1 to 8 risk to reward, right? Let's flip the coin heads. I'm gonna go for heads. Heads are the winners. 8, 16, 24, 24, take away 7 to the mouse, guys, 17. I mean, it's insane. The winner, you know, I'll still walk away with what, 24%. Let's just say I'm risking 0.5% per trade. I'm still walk away with 12% profit. Sorry, it was 17%, and then still I walk away with pretty much, I don't know, you know, 8.5 or whatever the number is. But it's insane, right? You're gonna have the numbers in your favor, but you gotta manage your risk accordingly, right? And that's what it's all about. Okay, so this trade goes on for a 1 to 6.5. We already, what, 10%, you know, what, 4% left in draw, only in drawdown, 3.5% in drawdown. But even these losses here, I mean, even for gold, for this, it's going to be always about, guys, how you manage risk and how you, you know, psychologically, how you control yourself when if you're in a losing streak period. It happens to everyone. This isn't a 100% winning win rate strategy. Okay, but I want to focus back on more on key levels and, you know, where to look for major, I mean, because I'm always posting videos. If you check my previous videos, guys, I'm always posting how you take entries on the, you know, with these like gold, euro USD, and all these other currency pairs. I've even done it for oil. But if you look at, you know, key levels, where you gotta look for the major rejections, you can use the bigger time frames. I've got a, now, okay, where do most of the people go wrong when it comes to trading, right? And I'm going to be, imagine you're a beginner, imagine even intermediate level, you come into trading, and the problem is, because there's thousands of strategies out there, thousands of currency pairs out there, thousands of few time frames out there, one, you don't even know what strategy you're going to trade with. Then you're going to start filtering that down. Once you filter that down, that suits your personality, you know, then you got to decide what currency pair am I going to trade, what trading instrument, gold, silver, euro USD, GJ, like, what is it going to be? S&P 500? Are you going to trade indices? Are you going to trade stocks, options? It's insane. And then at the end, you're going to decide what time frames you're going to enter, what time frames you're going to do your top down analysis, what time frames, you know, it's insane. Then you got to do back testing. You know, how long on average does your trade last? It's absolutely insane. But you gotta put in the work. Only, you know, the ones with the strong mindset, they survive in this. But it all comes down to this, how bad do you want it, guys? It's always going to come back to that, how bad do you want it. Now with trading, guys, you know, with the, I've always been a believer of key levels. I used to trade SMC and all these other nonsense things out there, but key levels, these numbers here on the right, can you see them? They're there for a reason. They're not here just for, you know, flashing, like, I don't know, just to look fancy and all that. You know, no, they're there for a reason. Use them now, and this is why I put a huge emphasis even in the like, if you see my winners here, guys. I mean, even if you see like everything, like, I was gonna click on losing trades. Let's just click on it. This is the elite mentorship. Of course, this is, you know, posting our losses, posting our winners. We do chart breakdowns, everything, group sessions. You see these lines, you know, because what I always put a huge emphasis on, tell the students as well, this game's all about key levels. Now, you know, you can ignore that if you want to. You can say it's liquidity, it's all this and all that. It might be, you know, I'm not the smartest guy out there, you know, but I don't believe in it, and that's what the method I show the students as well. Just go off key levels, guys. It will serve you well. I recently had a message on my YouTube channel on my previous video, someone saying that he was already profitable, but once he applied the key levels, you know, it's been an absolute game changer, and just you know, showing his appreciation. So yeah, thank you very much. I appreciate every single one of you guys showing support to me every single, and, you know, turning up and watching my videos. But okay, getting back to the point, so let's just break this down. So how to take these sniper entries, right? Focus on your key levels. That's the number one thing. Use the bigger time frames. Look at the major rejections. Once you've got the key levels jotted down, then you got to focus on what time frames do you want to use. Do you want to use the 30-minute, 20-minute, 15-minute? 10 minute. Now it's always like, of course not every trade is gonna, you know, play out, but you can see here 1 2 3 losses in a row. But if you were managing risk accordingly, which I obviously have put a huge emphasis on risk management as well. Suppose I'm risking 1%. Okay, let's do this one by one, right? Don't want to make this video too long, but suppose we start off with a prop firm 100k account. You're supposed to risk 0.5% for the first trade. If you lose the trade, continue risking 0.5%. If you win the trade, only you risk 1%, but risk your, you know, your gains. So imagine I risk 0.5%. This is a 1 to 6. I'm 3% in profit now. I'm going to switch to 1% now. I passed my phase 2, guys. Sorry, phase 1. So let's just type that down over here. And I don't want this to be actually phase 1 passed. Okay. Let me just sort the text here because I'm color it green, because I normally color my losses in orange, but I think this is going to follow us around. Yes, it is. Okay. So phase 1 passed already, right? Phase 2 started. So what I'm going to do, let me just delete this. Actually, I'm not going to copy. I'll just say, yeah, I won't just because it's going to I've got an anchored text, so it's just going to follow, so I can just put it on text. Actually, you know what, let's put it down here as phase 1 passed. Put this down here. Now over here, guys, 0.5% again. Phase 2, we only need a 5% profit. Phase 0.5% I'm risking. I win the trade again. Now I'm 3% up. I'm 3% in profit. I'm going to risk that 1% again. I lose the trade. I'm 2% up. I'm going to risk that 1% again. In this time, it goes for a 1 to 14. I'm going to stick to the rules. I'm not going to go for something insane. Let's keep it 1 to 6. A lot of you guys watching this video might be thinking 1 to 6 is insane. Trust me, the way I've refined the break and retest, you know, these numbers are not, you know, students are getting 1 to 4s, 1 to 5s, 1 to 6 pretty much all the time now. You know, there's some students that they don't speak in the general chat, but they message me pretty much on a daily basis, 1-to-1. You know, sometimes they pull out winners much bigger than mine. So I mean, boys, I can only be more power to them. You know, I couldn't be more proud of them. Okay, so this is phase 2 passed. Now let's just say we're on a funded account. 0.5%, I lose the trade. 0.5%, I lose the trade. 0.5%, I'm down 1.5%. 0.5%, 3%. Now I'm up again in profit 1.5%. My next trade, I'm risking 1%. 6. Now I'm up 7.5%, guys, on a funded account. If this was a 100k account, I would be up 7.5k. Absolutely insane. Now again, it comes to psychology. You know, I wanted to touch on key levels a little bit more in detail. I want to touch on how you can take these sniper entries. There are such things as, guys, 1 to 7s, 1 to 8s, 1 to 9s, 1 to 10s. And if you take partials, if you put your trade at break even, let the trade just run, it's insane sometimes what these trades can run to. You know, oil has been a game changer for me. I'm always you know, testing out my strategy on different currency pairs, different trading instruments, just to see the opportunities out there. I'm not changing my strategy. I'm not strategy hopping. I'm currency hopping. That's the only difference. You know, but yeah, I hope you found value from this video, guys. I'm gonna be you know, I set out a community post where I asked, you know, this used to be a faceless channel. It will not be anymore, guys. I'm able to provide more transparency, more value. If it's a faceless channel, it's going to be, you know, my value that I provide will always be limited, and I don't want it to be like that. And plus, it shows on the transparency side, guys, I'm not just a voice, you know, there's a face to the voice as well. I hope you found value from this video, guys. Like always, take care, and I'm out.